Let me also welcome on board Shivangi Sarda and figure out what she's making of the market right now. Shivangi, till last week, did you anticipate that we'll make it back to 23,400?
Good afternoon, Aisha. Thank you for having me. So we've seen that bulls were in complete action, and of course, we are touching 23,500 zones. We're at least inching towards it, which was looking quite difficult last week. But the FIIs have been a great support, as well as continuous buying by the retail as well. We've seen that from the last six sessions, every small declines have been converted into buying, and even though there has been some sort of profit booking, but the overall pullback move has been quite strong even in between. So the texture of the market is quite positive, and we've seen that pockets and sectors have been quite positive, and heavyweights are also contributing to this rally. So we are, of course, heading towards 23,700 marks with a support of 23,150 levels. And of course, sector specific action will drive the index even further.
Right, so that's the take. Hi Shivangi, good afternoon. Cheryl also joining in the conversation. I wanted to get your view, especially on the metal space, because right now you have everyone talking about how the metal space is going to buck the trend, given the fact that you have global scenarios supportive of the metal space. But what's your take on the metals on the charts? Are prospects looking very bright?
So yes, Cheryl, talking about metal space, they have been in a little lackluster move for the moment. We've seen that even uh, earlier this month or earlier this series per se, steel was some back which was gaining a lot of attraction. But right now we're witnessing some profit booking at the higher zones. The good part is that it has been sustaining above good support levels, which is making it comfortable at these levels. But some consolidation expected here. Out of the entire metal pack, I think Tata Steel is one of the counters which is quite stable and resilient despite the market volatility. And this has been one stock which has consistently performed, from the last 2 months. So good amount of attraction here. We could expect round about 165 odd levels here for Tata Steel, but of course, this one will require a little patience with a support of 155.
Let's talk about the markets, because right now we are near the day's highest point or somewhere close to the day's highest point for the markets, but nevertheless no points for complaining, given the fact that from the March 4th lows we've seen a substantial rise for our Indian markets when you compare it to the rest of the world. We have Devang Mehta who's joining us right now on the show. Very good afternoon to you, Devang. Thank you so much for joining us on ET Now. I wanted to get your view on the sense of where the markets are headed from here on, given the fact that you think that this is a sign that we will only see brighter futures going ahead, or what someone should brace themselves and not go all out in the market right now?
Good afternoon. Thanks for having me on the show. It's always a pleasure to be on ET now. Yes, I think typically this type of bounce backs, when they come in, a lot of people, a lot of participants, market participants attribute this to more of a dead cat bounce or just a sort of a bounce back or a relief rally as such. But I think more often than not, such relief rallies become real rallies. And why I say that, because a host of factors which played out in the last 2-3 months, be it liquidity infusion by the RBI, a decent budget, a rate cut, a decent sort of an earnings season. I think capex also coming back. A lot of indicators showing that even capex is happening. Inflation coming down. A good set of industrial production data numbers, and RBI also probably now becoming pro growth over the next 6 months, 1 year period. I think plus a good. I know that I'm again exaggerating. There's a Kumbh Mela, and there is also a wedding season, which was supposed to be a good season. I think all indicators prove that probably the next couple of quarters, the earnings would start improving. Earnings was a little bit of a culprit, if I can say, in the last 2-3 quarters when things slowed down, when even government capex slowed down. But I think looking at all the factors, looking at US markets which rallied and are sort of looking a little expensive, I think the global rhetorics also probably being a little bit more silent now and people not responding to everyday behaviors over there. So my sense is that yes, this rally probably, if at all the market consolidates at this level, it will be great. But I don't think there is a lot of pain ahead. The pain that we saw, I think, seems to be probably not so much of pain ahead. And I think yes, good time should be probably back in the next 1 or 2 quarters.
Interesting. The one intriguing move today has been what's happened with IT. Accenture saying that they're returning to strong growth in FY25 with broad-based growth across markets, industries, and the types of work that the clients are seeking from them. They've narrowed their full-year growth to about 5 to 7% in local currency, and they're updating the operating margins to about almost 15.6 to 15.7%. Of course, overnight you had the IT ADRs as well, the likes of Infosys, Wipro also fall, but after a gap down start, there's been a meaningful recovery that's come in IT stocks back home. Shivangi, what's been your reading? I mean, this is one sector which is in oversold zone, right? While the valuation still may not have corrected as much, but do you think there could be, some bottoming out in store in the near term?
I believe that IT stocks, start moving to again consolidate. So there has been momentum in the last few weeks, but then again, we've not seen that any follow up is there. So I am looking at heavyweights as well as the mid cap names, but none of them have shown, sustained strength over here. So my take would be we could wait and watch here and focus on the banking names or maybe some of the consumption names which are picking up strength.
Right. So that's the take coming in on IT. Thank you so much for that, Shivangi, for giving your view on the entire IT space, given the fact what's exactly happening to it. You had the Accenture commentary. You saw the stocks actually see a downtick. From there on, actually try to pick up some sort of steam. Let me come to you actually, Nuresh, and get your view on the power space. How is this one looking to you? Because this was once upon a time touted to be the narrative sector, narrative stock. Everyone was talking about power. Everybody wanted to get into this space. After the correction, I think people also burned their finger in the power space. So what's your take now?
So we've seen a correction, but not a very large correction in a lot of power names. So something like Tata Power corrected from 500 to 350, which is in line with the market correction of a mid cap for 25-30%. And now we've started seeing a recovery. Other smaller names like CSC saw a large correction, almost for 40% down. And we've started seeing a recovery across the board. So some of the names still look interesting. So NHPC, which corrected from 115 odd levels to 75, 70, 75, looks interesting, has made a good base and breaking out. Same way, Power Grid becomes a buy on dips because that's a low beta stock, which looks interesting. So we could see much more bounce back in the power names going forward.
A bounce within power. In fact, on that subject, let's also hear out Vikas Khemani's view. We chatted with him earlier today from Carlinian Capital, and he's also of the view that power could be a big turnaround story for this year.
I think this year, and I continue to believe that banking, we overweight banking and financial services, especially the large banks, some of the NBFCs, they would outperform this year. Already they are outperforming the broader market. They would outperform this year. They will do very well. And that I think is looking pretty decent. Some of the pharma names looking pretty decent. Within manufacturing, because of this whole, worry about stocks have corrected. And I think so. So I think nothing new per se. The only thing probably I would say that in this market, we have also kind of done a little bit more around the power and electricity side of the business, because I think that's again another structural theme, but that's part of sub theme of manufacturing in some sense. But we think that incrementally India is staring at a power shortage over next 3, 4, 5 years, and the consumption of the electricity is going to go up because of data center, because of infrastructure, metros, malls. You need to keep pace with the generation and the entire ecosystem. And there, I think a lot of investment, not only in India, globally is likely to happen. And hence, I think that's a one probably segment or sector which I think one should look at, commit some serious amount of. We already have that, but I think some serious amount of we continue to kind of add as and when we get good, interesting opportunity out there.
All right, moving on, let's put the spotlight then on Adani Energy, because that particular counter has won a power transmission project in Gujarat. The project will be worth about 2,800 crore rupees and will be delivered in 36 months. The project will enable green hydrogen ammonia manufacturing. This will also see the addition of about 150 CKM of transmission lines and 3,000 MVA of transformation capacity. This is Adani Green Solutions' sixth order win this fiscal year, taking its order book to about 57,561 crore rupees. So watch out for Adani Green on this mega order win worth about 2,800 crore rupees. But Devang, let me come to you and let me get your take on some of these Adani group of counters. Have you tracked them closely? Because, you know, they've somehow fallen off the radar for most of them. But have you actually looked at any of them, and which one do you think looks good?
We don't have a coverage over there and we don't track it very closely.
About the Adani group of counters, you don't track this one. But what about the entire space which is dealing with jewelry right now, given the fact that you have gold that's at record high levels? There are jewelers that you can look at. There are actually gold loan financiers that you can look at. If you have to look at this as a theme, would you look at any of these counters, or you give it a skip given the fact that it is a metal, it is a yellow metal, and it is bound to have a lot of fluctuations?
As a space, so I'll tell you, as a space, in fact, discretionary consumption looks extremely good. So if I look at the macro theme, yes, we know that the capex has started to do well again. But discretionary consumption is one theme where if you can pick up great businesses across the spectrum. So for example, you talked about jewelry. Of course, I'm not recommending, but saying that companies like Titan, which of course is a huge proxy play to play the jewelry industry via Tanishq, and of course, there are a lot of other sub brands which are also doing well and catching up. The company has been a relative underperformer, though it has not corrected big time. But I think yes, companies like Titan, companies like Trent, again organized retail play, but Trent has seen a huge amount of correction, and I think this is another company which should probably be on the radar of a lot of investors. So I think yes, jewelry companies. Lifestyle retail type of companies. There are again companies in the hotel universe, companies in the travel universe. I think this type of consumption is surely going to grow, though non-discretionary may remain a little bit of pressure for volume growth. But I think people want to spend, and we have seen this season as well as the last season that there's going to be a lot of spending. I think I was just listening to a conversation about IPL or the season approaching for IPL. I think these are seasons where a lot of people spend. I think the summer holidays are also in. I think a lot of spending would happen into this type of sector. So my sense that the quarterly numbers in the next 2-3 quarters will also be good for such companies.
Okay, that's that on the entire gold play and, of course, the jewelry space. But, you know, with scorching summer upon us, the Power Ministry is holding a very crucial meeting of all stakeholders to take stock of the ongoing projects, power demand and supply preparedness as well, and much more. Prakash Priyadarshi, my colleague, is here with more details on how critical this meeting is going to be and what's likely to come out of it.
The government has reviewed the current status of under construction thermal power projects across the country. A very significant development coming in. We are given to understand that the Power Secretary has held an important meeting with the stakeholders. This meeting was very crucial in the backdrop of rising power demand during upcoming summer and monsoon season. In fact, sources are suggesting that the PSUs such as NTPC, CIL, BHEL, SJVN, NLCIL have attended the meeting. Independent power producers such as Adani Power Limited, JSW Power, ISA Power, Vedanta Power, among others, were also part of the meeting. Power Secretary has asked for operationalization status of new thermal power projects targeted for FY25. In fact, generation companies have been given clear instruction to give priority to operationalize new thermal power projects for FY25 so that any sort of energy demand could be met going forward. Along with that, sources are suggesting that the Power Secretary was informed that approx 2,700 megawatt thermal power projects have already been commissioned. Approx 57 megawatt capacity of new thermal power projects will be commissioned by March 25. Status of approx 28,000 megawatt under construction thermal power projects were also reviewed. Along with that, it was informed that 26,000 megawatt capacity of new thermal power projects are under planning. So these are the important status that were presented before the Power Secretary, and it was decided that the issues being faced by the generation companies will be discussed with the state governments.
Okay, that's that on the entire power space and that critical meeting, which is, is slated for today. But let's just take stock of what else has been happening in the market and a very good, meaningful recovery when it comes to the mid and the small cap space as well. Naresh, particularly on the mid cap index, do you sense that the rebound will continue to be stronger as opposed to the Nifty net return? Or do you think there is a chance that perhaps the broader market will slow down and it's the Nifty which will overpower?
So if you look at the recovery, to the extent of recovery, in from the bottom, it may look mid-cap has done well. But if you look at the last 3 months, we've seen a stronger recovery on the Nifty because it did not correct as much as the mid-cap indices. So going forward also, I would expect in the near term, it may look mid-caps doing better, but over a 3-month, 6-month period, it would be Nifty which has done relatively better. So for now, there are some more legs. We could go back to say 54,000 on the Nifty mid-cap 100, which is still under 5-6% away.
Naresh, what are your BTST ideas for our viewers?
So that would be a buy on Canara Bank first. That's a stock which has seen a large correction and making a reversal today. Stop loss at 87, target price of 91. Second is a buy on NHPC. The stock has made a good basing out formation and breaking out. Stop loss at 83, target of 87.
All right, so those are the BTST ideas coming in from Naresh at this point in time. Devang, let me get your comments actually coming in for the entire space that is the real estate space. We did take a view actually earlier on the charts how the real estate space is looking like. What's your take coming in for real estate?
We generally sort of play it via allied plays, but honest to tell you the truth, a lot of ancillaries of real estate, be it a lot of power companies, be it capital good companies, be it even certain home improvement companies, which would tend to now do well. I think a lot of these companies didn't perform very well, but most of the pre-sales that you saw had a good sort of impact in the last quarter as well, and this to a few real estate promoters. I think you get to know that still the demand is good. I think even the luxury end of the consumption is still doing good, barring one or two companies which were slightly negative. But even the registrations have been quite strong. And with, I think, the summers approaching, a lot of sales also start happening during this period with Gudi Padwa falling into this month. The festive season also is a bit of a good sentiment booster for them. So my sense, yes, the sector will do well. The creamiest of the meatiest of the rallies have happened in the last I think 1.5 2 years, but there is still some upside to go for this sector.
Okay, that's the entire take coming in the realty pack. Today, of course, it's a lot about those, crude sensitives. Look at the OMCs, look at what's happening on an ONGC. And then Bajaj Finance, of course, has been a very strong show. 89.37 on that stock, a good 3% move. In fact, from its 52-week lows, this stock, of course, began its recovery much earlier than the rest of the market. It's seen quite a bit of move. In the last 52 weeks, it's seen a 32% of an uptick. And maybe we should just bring up the last 2 months chart or 3 months chart if we can, because that's where the recovery from those lows actually began. That perhaps is the correct most chart. 3 months, 30% higher. It's seen a 2,000 point move. Devang, what's the view on the entire NBFC pack, led, of course, by leaders like Bajaj Finance?
You probably can't keep out good companies for long, and that is the reason why Bajaj Finance, Bajaj Finserv type companies are sort of now coming back. They showed the strength of the business model, and what classically people say is that form is temporary and class is permanent. So yeah, they are market leaders in their own sense, and I think they have delivered on numbers as well. They went through a sharp bit of a correction on the bourses, but I think most of the quarters, if you look at barring 2 or 3 quarters where they suffered a setback, there's good set of numbers. Plus also now even RBI has come to the support in terms of sort of laying down certain other foundations for this type of businesses. I think a lot of cleanup has been done, not only by banks, but also by a lot of NBFCs as well. I think from here on, if the credit growth comes back, I think a lot of these NBFCs tend to benefit from that type of credit growth as well.
Right, so that's a take coming in on NBFCs as we are actually inching closer to winding down for trade today. Let me actually get a quick chart check of what we should anticipate going ahead for the markets. Naresh, coming to you, what's your take? I particularly want to know what's your take coming in for the Smith space. What should one prepare for when you come next week? A brand new week. This week has been pretty good. You think we can see the replication of this next week as well?
So I doubt we could see a similar replication. We've seen a very strong move in a week. The expectation would be we could take a pause for a couple of sessions, but stock-specific action could be positive. So for now, time to be more stock-specific rather than index. But a pause for the next 2 days in the first 2 days of the week would be normal.
That's the take coming in the market right now. Naresh, great to have you on the show. Devang, good speaking with you as always.